Hello, this is October 21st, 2015. We got another trade review today. This is Manesh Patel from Ichimoku Trade, one of the leading companies in regards to the Ichimoku indicator. One of the biggest myths on the web is that basically Ichimoku does not work on lower time frames. And, as a trader, you should not sit there and have that concept at all. Traders should have really no limitations at all. A lot of people that make that statement about Ichimoku really don't know what's going on at all. And I want to show you a scalp trade taken by one of my students, not me, on the E-mini S&P 500 futures today. And I'm going to step you through that entire process. Before we begin, let's go through a disclaimer. This is for education use only. We're not soliciting you to buy or sell any particular instrument. If you're doing so, you're doing that at your own risk. All the information is owned by EII Capital Group. It cannot be copied or distributed without written permission from us. We are broker neutral, so we support various platforms from Thinkorswim, TradeStation, eSignal, and so forth. Okay. I'll show you my contact information in just a moment, but let's go to a chart. So this is the E-mini S&P 500 future trade taken today. All these times here are basically Eastern Standard Time frame. This is a 512 tick chart. So basically the goal here is to scalp. Now, this trader's personality is where he wants to scalp, and basically his beginning stage, phase one of what I call learning how to scalp. Okay, so his goal is basically to sit there and trade the strategy, become comfortable with it, but not try to optimize it greatly at all. And I'll show you the difference between the two in just a moment. Okay, so if you want to be a scalper, this is a type of trade that you'll be. So this is basically where you're living on a 512 tick level chart. Now, for this student, basically what happens is that they're not looking for a trade every minute of the day or so forth. They're looking for high probability scalp trades. So this person is not sitting there just trading the E-minis. They're monitoring various different future products to see which one gives them a high probability trade. Okay, so they're not just trading E-minis like everyone else is out there. They're trading various products because they're not sitting there desperate looking for a trade. So off here, this was happening is that this green line here, which is a major support here at 20.37, and if you round that down, that's 25. This is a multiple time frame support from a tick level all the way to the higher time frames. So what happened is this trader put this order here, put a buy order there at 20.25, and basically had a two-tick stop. One tick is equivalent to, for one contract, $12.50. So the two-tick stop was basically risking $25 at most for this trade here. Okay, so they ran in right here at this point right here with a $25 risk, and you could see their goal was to get to this level here, which was a higher time frame resistance. Okay, you could see this was basically a cloud breakout, a pullback to a major support, and then basically that was a strategy going forward. So this is exactly when we first took the snapshot. This is what it looks like here. This is later on, you could see kind of them getting closer and closer to their target as we move forward. Now, he hasn't moved the stop in this snapshot, but basically the stop should be trailing off the green line minus a buffer in phase one of a student where they're not trying to optimize. Okay, so over here, this kind of shows you him moving the stop here, and you could kind of see it didn't get to his target because the initial target was up here. So what happened is it got to this level here, 2024.25. His target was 2025. So it missed his target by 3 ticks. So once it missed his target by 3 ticks and you started seeing this, he adjusted his target to be this level here. Okay, and he also tightened up his stop. And you could see down here, we blanked out that count here. You could see at this point right now where price is at, basically it's $150 in profit there. Remember, he initially started off with $25 risk, so the reward risk is very, very well on this trade here. Okay, so now if you look at it here, basically he got stopped out of this point and he walked away close to $100 in profit here. So for a $25 risk, you got a 4-to-1 reward risk ratio. That's very great for a phase one student. Okay, once he gets better and more confident with the system, what's going to happen, he's going to learn how to optimize this, where he would have got out somewhere close to up here. So he would have got out close to about $150 in profit, somewhere right around here. So at that point he would have got close to about, let's say, $150. So about 5-to-1 reward risk ratio, which would be up here. So remember, this is a brand new student learning how to trade. Also, they're determining whether scalping is their personality or not. But this is a great insight that gives you an idea that Ichimoku can safely work on tick level charts and lower time frames. The key is finding the multiple time frame support resistances and then taking trades on whatever time frame you want based on the MTF levels. Okay, and that's how you could sit there, enter, and sit there and have really great reward risk ratios, and you could actually make a great living by doing this, by going through looking for high probability setups across various instruments. Okay, so that concludes everything there. If you guys have any questions, feel free to ask. Let's see, the rest PowerPoint is here, and so here's our contact details here, so you can follow up if you guys have any questions or concerns, or you could call us here. Thanks. Bye.